Hi folks, I'm Luca Moschini and I teach with Udemy. So we're doing this segment series on what's the best way to trade. And today we're going to cover moving averages and support and resistance levels. So support and resistance levels are the foundation of trading. You gotta know where those levels are. And we do that by utilizing prior history. We'll take a look at a chart that goes back 6 months, a year, 5 years, 10 years, depending on the capability of our platform. Sometimes you need to shift from the daily chart to the 3-day chart to the monthly chart or weekly chart to give you more of that range visibility. And then you want to look back as far as you can to see where there are similarities in the price levels, where price stalls, doesn't move there, and goes down. That's the resistance. And then price bounces and goes up. That's a support, right? Those are the basics. And then the resistance eventually breaks, goes up. It's a breakout, breaks, retest, holds, and then goes higher. It's a breakout, right? And then the opposite is also when it breaks the support, fails, goes down. That's a breakdown of the support. So you want to know those levels, very important. Now, here is the tip. This is something I figured out and it's been very useful. Make sure that there is equal space between those levels of support and resistance. Let me show you how. I'm going to share my platform quickly. This is a TC2000. Here it comes. All right, so we're looking at the SPY. Those lines, those are moving averages. I'll talk about it quickly in a moment. You should be familiar with that. So we got some resistance up here. This is the S&P 500 ETF. So we got 480, the top right there. This is basically the all-time high. Look at this thing, it's been moving like crazy. And so here we're going back 2 years, 2020. If I scroll over, you can go all the way to 2017, right? So here you want to select a top and a bottom. So let's see right there. And then let's see right here. Okay. So now you want to find areas of similarity. So I see some support right there. And then I see some support right there. I could put it here, right? But I want to see more equal space. So maybe I'll put it here. This looks a little more similar. And then it matches some of those eyes right there. And then I'll do another one right there. See, now there is a similarity between this space here, and this space here. And then I'll do that all the way to the bottom of this lower support area. And again, keep equal space. That's important. And then, we modify it. We find ways to work around it. As price moves forward, then you modify your support areas if something changes. Okay? And again, those are, open to interpretation. They can be changed. But those are the general levels, the floors and the ceilings, and use equal space. In addition to that, first of all, why? Because sometimes the chart goes into uncharted territory. The price moves in areas where there hasn't been historical data. So you can use this equal space to measure a price can move. Like, for example, this is the all-time high. I could use this same space right here to place the next resistance level. So there would be 496. I could do even higher for the SPY. There would be one. This would be a little higher. Okay. 496, 470, and 517, right? So that's how we use the space level. Those are just horizontal lines. And then in addition to that, we use moving averages, those colorful lines. And the one I use, basically, 50 simple the moving average for the midterm, 6 months. The 80MA for short term, it's a week. And then the 200 simple the moving average for, that's the red line, for the investment, the long-term trading investing, yeah? So those are the major lines. Red line, 200 SMA, blue line, 50 SMA, orange line, 80 MA. In addition, I also have the purple line, that's the 34 MA, the gray line, that's the 21 SMA, And sometimes also use the green line, that's the 3 EMA, right? So that's for support and resistance, equal space, and moving averages. Okay, folks, thanks for watching. Again, Luca Moschini, teacher at Udemy. See you in the next video.